6 out of 10 G10 central banks have monetary policy announcements this week. That includes the Federal Reserve, the Bank of England, the Bank of Japan, Swiss National Bank, central banks of Norway, and Sweden. Some of these central banks are expected to change interest rates. Others are expected to leave them unchanged. Regardless, what we know for sure is going to happen is that there's going to be a lot of volatility in the financial markets, particularly in currencies. Because aside from that, we also have the PMI numbers from Australia, UK, Eurozone. We have inflation data from Canada and the UK. So the calendar is chock full of market moving events. Of course, front and center is going to be the September Federal Reserve monetary policy announcement. The market is not pricing in a rate hike from the Federal Reserve, which is kind of interesting because the dollar has been very, very strong. Dollar in itself is trading at its highest level since November. So it looks as if the market is expecting a rate hike. But according to Fed Fund Futures, the market is not looking for a Fed hike in September, nor are they really pricing in a Fed hike in November. So what is expected? Well, what is expected is a hawkish pause where the Federal Reserve leaves interest rates unchanged, but also leaves the door open to additional tightening. They kind of need to do that because, first off, retail sales numbers last week was very good. And so that kind of says consumer spending is doing well. And secondly, we know that inflation, there's upward pressure with gas prices rising and oil prices basically eyeing $100 a barrel. So all of that should keep Powell hawkish. And all of that basically forces them to leave the door open for tightening, especially with the labor market not doing so bad. I mean, it's not as good as we would like, but it's also not weakening. And the main reason why the US dollar has been so strong is because the US economy is, it's not running hot, but certainly running hotter than a lot of other countries in the world, like the Eurozone, the UK, China, Australia, Japan, pretty much, most countries, the US economy is outperforming. And that is why the dollar is attracting demand and why it remains bid. So a hawkish hold, will that be positive or negative for the dollar? We'll have to see. I think it's not going to hurt the dollar rally too much, but that of course really does hinge on Powell remaining hawkish and not emphasizing, the possibility of a downturn in growth and focusing much more on inflation. So there's a lot going on for this week's Federal Reserve meeting because aside from the rate change or possibly no rate change itself, we also have the economic projections, the dot plot, and Powell's press conference. From the Bank of England, they are expected to raise interest rates, but this is expected to be their last rate hike, kind of like the ECB last week, where they raised interest rates. We could see the BOE raise interest rates and sterling actually sell off. Now, that of course will be hinged upon guidance, but last week's economic data from the UK was quite terrible with UK job numbers, falling. I think it was 3 times more than expected. Inflation is falling, and we should see that in this week's number. PMIs have been weak, although we'll get the latest updated PMIs this week, but overall, they're not really in a firm footing. So I think, they're going to raise interest rates, but there could be some downside as a result of that. The Bank of Japan is not expected to change policy, although I would not rule out an interest rate increase or, change in the yield curve control, because it seems like they think that is the only way to stop the yen from falling, because it doesn't seem like they're resorting to physical intervention. Maybe they've learned from the past that physical intervention really doesn't work. But that's what I think is a possibility, which is, don't rule out possibility of a surprise from the BOJ. And that is what could really halt the rally in dollar yen. But, it is a small risk at this stage. Swiss National Bank is also expected to raise interest rates. So that could lift the Swiss franc. In terms of Norway, I think they're done. Sweden, they're one rate hike behind Norway. So I think they could give us one more rate hike. But of course, NOK, stocky is not really currencies that our traders focus too much on. Now, in general, with the PMI numbers, I think global growth is showing signs of weakening. So those numbers could be a little softer. Beware of that. But the main focus is going to be on the US dollar and what comes out of the Fed meeting. And then we also have inflation data right before the UK inflation data right before the Bank of England meeting. I think the Canadian dollar itself is going to continue to outperform because we have CAD CPI numbers, which should be hot due to rising price pressures and energy prices. Retail sales should be stronger due to the hot labor market numbers. So I still can believe that the Canadian dollar is going to outperform. So we have a lot going on this week. I'll try to keep you updated. I want to wish you all a great trading week. Please also check out our new website, bktraders.com. And for those of you that are members, join me for our daily live stream. I'm so excited to be talking to you every single morning, sharing with you my thoughts on the fundamentals in the market. Have a great week.